Hey everyone, Dan here. I wanted to take a look at a few of the stocks that we've been tracking just to give quick updates on each of them so that you could have the info as you get into your trading week. Let's kick it off with Palantir. So PLTR came down on Friday and hit this double bottom. The thing that we've been pointing out most recently with Palantir is it's sort of holding to double tops and double bottoms. So this is on the 5-minute chart. So you see here, there was actually sort of like we could just call it a double bottom with this one, and then it was running up, and same thing here. It started to fall down, double bottom, ran up, started to fall down, double bottom, came up, and sort of like quadruple bottom there, and continued to run up. So it has really held to the double top, double bottom theory on the 5-minute chart for several days, if not more. Maybe this stems back much further than I'm even looking. But I mean, if you look back here on the 4th, there was double bottom here, during this whole run up, double or triple, quadruple top here, pushed it down, topping out there, topping out there, topping out there, double bottomed here, and then reverse trend, came back up. So I would really be looking at the double tops, double bottoms on the 5-minute chart for Palantir. I think that's the most compelling way to play this one. For myself, I would be looking to get into like a shorter term position and just kind of play that double top, double bottom, get in, get out kind of situation. I do think there's a strong case for like this stock doubling in the coming months, or at least before we're out of 2021. So I wouldn't be super worried about taking a long position if I wanted to have an investment instead of like a trade opportunity. So that's PLTR. I guess while we're here, as you see at this 24-28 yellow line, something we've been talking about for several days or a week at this point. But this is its current resistance, needs to get above that and develop support. And then there is essentially this big area of consolidation that you'll see from 26 to 27. And then there's a lot of room to run up into the 30s. So that's the best case there. NIO has been taking it incredibly hard on the chin. NIO, what I have been saying was basically like, be careful if it gets into this red box, sort of like red box of despair. This is on the daily chart right now. So it fell below our 38.25 sort of like cut loss that we had charted out several days ago, and it did that, but it sort of like established itself back here. The wick extends below, and it sort of like settled at that level. So it like dipped into the red box, but very quickly got bought up, so that's a good sign. So I'm hopeful that there's a push off of this high 30 area. And I do think that we pretty quickly get back into the 40s because there's not a ton of friction points between where we are right now and getting into really into the mid 40s here. So I'd be looking for a good, 20, let's say 15 or so % run up in the coming days. Wouldn't shock me. And sort of like getting back to this previous consolidation area here, which is sort of like all these friction points, if it sort of like does that again and then gives us an opportunity to push up to the 50s again. So, but if we get stuck in that red box, to take the other side of this potential trade, if we get stuck in that red box, I do think this is like the red box of despair. It has the potential to be dropping down all the way into the low 20s, which at that point, if you're buying NIO at this point in time with the company that it's become in the low 20s, cool. All right. SKT, I still don't know much about the stock, to be honest. We had covered it because some folks had asked for it to be covered last week, and so I thought I would sort of like come and revisit it. There's not a ton that's changed. This is the 1-hour chart. This red level is still holding as support. It was holding as support in this time frame here. It's now holding as resistance. So it's not so far off of that it's like a game changer. To me, I'd be looking for this like 1530 to 1520 double bottom to hold. You know, if you are in this play already, I wouldn't want it to fall below there. I'd want it to get bought up if it reached that level again. The next most important thing with SKT is for it to establish 1657 as an support zone and be able to push off into the high 17s, because again, there's like consolidation that's going to happen between there, but there's not a ton of friction points where it's going to like get bounced back down to 1657. So I'd be looking at that 1770 with some hope once 1657 is considered support instead of resistance. GME. GameStop, I'm not going to spend a ton of time on this because nothing, in my opinion, has changed from what I've been saying. You know, this is, let's go back to the 1 hour chart. The same thing stands, you know, it's sort of like on a good uptick at this point. There's all of this sort of support cushion, which it's a cushion just because there's like so many levels of support underneath GME's current price that, again, if you're going to fall into the low hundreds or into the 90s, you're going to see that coming from a mile away because GME is going to come down and get support from all of these zones and continue falling. And if that happens, then sure, like you should act accordingly. But I feel really good having so many levels of support underneath the current price and such big areas to run above the price. So like $10 increments where it can run up to the upside. So my thinking is still that we see GME at $200 a share before we see it again at $80 a share. So that's my take. One that I'm just realizing that we might as well take a look at while we're here is AMC. You know, and this is again sort of like just a broken record moment. What I've been saying for like a week is that 9/11, this right here, is the most important price for this stock right now. Yes, there's like friction points in between, and yes, it's stuck under this 808 resistance at this point, but like those prices don't matter that much because the reality is if AMC can't get above 9/11 and establish that as support and push off of it, then the stock is just going to fizzle. It's just going to lose. It's already lost a lot of momentum, and it's just going to continue to be the case, and it's just going to fizzle and sell off if it can't establish 9/11 as longer-term support in the coming days. I really think that this is like an imminent need for AMC. So if y'all are in these plays, good luck. I wish you the best. If you're looking to get into them, you know, I would look for some of those like lower support or friction zones that we talked about for maybe areas that it could bounce off of that might give you a good entry point. If you enjoyed the video, please hit the like and subscribe button. I really appreciate it. And I will see you all in the next video.